Okay, thanks everybody. Apologize for the hijinks here. So my name's Niel Marotta. I'm the co-founder, president, CEO of Indiva Limited. We're a licensed producer based out of London, Ontario, and I'll give you a quick run through our deck and presentation. On the cover slide here, you can see our portfolio of products, almost all of which are in market. I'm happy to say we've got a few lined up for the rest of the year that we'll talk about as we go through the presentation. Yeah, our focus is really on edibles. So you'll hear me talk a lot about the edibles market and about Wana, which is the #1 edible in the country, as well as Bang Chocolate, which is the #1 chocolate edible in the country. And we'll talk about some of our other products and our growth plans. And this is a forward-looking statement. I'll let you read at your own leisure. And just as an aside, thanks to Niel Locke and the team for setting this up, and thanks to Bruce for the kind introduction. So quick look here at the company. These are all the pictures in this deck are pictures from inside the facility. So, you know, as you might become accustomed to now with licensed producers, hyper clean environment, sanitized, not just clean, where we make really pharma grade products. 135 million shares at basic. So our market cap today, just shy of 70 million. We think we're undervalued relative to our peers. We pre-announced 7 million of net revenue. Important to distinguish between gross and net revenue for the fourth quarter. We're on a calendar year, so that's the quarter ended December. So that would annualize it close to 30 million. So we think our 70 million market cap is quite low relative to our peers. We had a significant transaction last month in February. We closed a $22 million strategic investment from Sundial. That was 11 million in long-term debt, 3-year debt, and 11 million in straight equity at 44 cents. And so our balance sheet has, and this was one of our 3 big priorities for the year. So we've tackled it early, which I'm quite pleased about, but we've significantly improved our balance sheet here and our working capital position to the tune of 22 million. So this gives us adequate capital now so that we're not, let's say, concerned with cash on a month-to-month basis, and where we've got the capital we need to put through further improvements, improve our margins, and scale. Insiders are big holders. You know, let's say that between the board, officers, directors, we're at about 12% ownership. And then other big shareholders, including Bruce, would be Prairie Merchant. Brett Wilson's company owns north of 10%. Alan Markin owns just shy of 10%. And of course, Sundial, they're at 18.5%. So let's say half of the shares owned by, let's say, those 4 groups and insiders combined. And that would leave about 65 to 70 million shares of float out there right now. One more thing to point out before I get into products, we do have 17 million warrants at 40 cents, all of which are in the money. Those are left over from the August private placement that we completed. And also our convertible debentures, those are all priced at 20 and 25 cents. So everything is well in the money at this point. This is a good look at some of our products. You can see mango gummies. You can see Bang chocolate, pre-rolls, and capsules, either on the production line or in finished goods. And that really represents all of our revenue here. This is probably my favorite slide in the presentation, and really shows, I think, 2 things. The big step up in revenue starting in Q1 of 2020 when we received our license to sell edibles. And then in Q4 2020, that has not been reported, but rather has been pre-announced back in January as a revenue guidance on a net revenue basis, where we expect around 7 million of net revenue. And that big bump is a result of having a full quarter of sales of Wana gummies. In Q3, we had 1 month, and in Q4, we had 3 months of sales. As I mentioned, Wana is the #1 edible in the country. And on its own, those 7 SKUs and that brand represent north of 30% of the entire edibles category. So we're very pleased with how well that product's been received. And We would expect growth to continue. I don't know that we'll see the kind of growth rate that we've seen in the last 4 or 5 quarters, but certainly we expect to keep growing, over the coming years, mainly as the industry expands and as the category expands. And we'll get into some of those details in a minute. On the margin side, our margins have improved. We are not satisfied with where they are yet, and we know that we have got sort of baked in the cake, no pun intended. But our direct materials have declined significantly. We've seen distillate costs go, down from 80,000 a kilo, or down to 4,500 a kilo, and so that will start showing up in a major way in Q1. In Q4, we had a big mix shift towards CBD product, and in particular, there were 3 Wana SKUs: the pomegranate, the yuzu, and the strawberry CBD, all of which have more CBD than THC. And so if the margin expansion is muted in Q4, it's simply because of that mix shift, where we were working through the last remaining, we'll call it very expensive CBD distillate. And in Q1, we're clear of that. So you'll see really, I think, an acceleration in an improvement in our margins in Q1 and beyond in 2021. This is a snapshot, and these numbers are obsolete the moment we publish them, but over 1,400 stores in Canada. I believe Ontario now is over 500 stores. So, it shows just how quickly Ontario is adding stores. And that's a big part of the growth story. Access is important in terms of driving total revenue in each province. And, the proof is in the pudding. Alberta was way ahead of Ontario in terms of opening up stores, as a result of the path that they took. Folks may remember a couple of years ago, there was a lottery system in Ontario to open a store. That made way to, a much more clear private system where, upon achieving the proper licenses, you can go ahead and open a store and retail and operator licenses. So I would expect that store count in Ontario to be north of 1,000 by the summertime, and upwards of 1,200 plus by the fall or year end at the latest. We have at least one product in 80% of all the stores in the country. That's pretty good rollout of distribution, we think, given that we hadn't even really sold a product 2 years ago, and we only sold our first edible in February of 2020. So, in many ways, our 5-year-old business, or 6-year-old business, really, the company was founded in mid-2015. And really, in many ways, our business is only a year old, our core business. And so we're very excited about the growth. The overall market was $3.6 billion in December. That's an annualized retail number. I saw a report this morning from a brokerage firm that they expect that number to double within the next 2 years. That sounds a little aggressive, but I think it just shows this Canadian market probably should be $7 to $10 billion. There's other third-party reports that sort of put out that total aggregate size for Canada. And when we look at comparable markets like beer or wine and spirits, both of which are 9 billion plus, or tobacco, and I think it's 12 billion plus, to get to 7 to 10 billion for cannabis in the country, we think is reasonable. So, we would expect our business to be able to double or triple with the market. And we'll talk a little bit more about the category, but we think that adds a nice boost as well to the total addressable market size that we can play in. And right on cue, these numbers are probably need a refresh, but the key takeaway is that while edibles are about 5% of the pie in Canada, when you look at mature markets in the US like California or Colorado, you're looking at 2 to 3 times that number. And these numbers fluctuate based on seasonality, et cetera, but we would expect the edible category to at least double in Canada over time while the entire market triples. And so this is the kind of 6x opportunity that we see for our revenue if we can maintain our market share. And when you look at the actual breakdown of the categories into the subcategories, when you look at the U.S. market, roughly 70 to 80% of that market is chocolate and gummies. In Canada, it's 90% plus. And so we are actively growing the edible category with our product introductions. It's all fine and well to live in a spreadsheet, but in the real world practice, new product introduction, is going to grow the size of the category, as well as coming out of a lockdown. I mean, stores have been closed for months in Toronto and the Greater Toronto area. So, that's 100 to 150 stores where people couldn't go inside for months at a time. So, we think as we get back to normal here over the next 3 to 6 months, we'll see that category grow as people can go into the store and get educated about how to use edibles properly. This is a look at, I did one of these presentations, I think, with Niel and Bruce in Vancouver about a year and a half ago, and we had one lonely check mark up in the top left corner, distributing only pre-rolls in Ontario. And now you can see we've got coast-to-coast distribution of multiple different products and SKUs. Our total SKU count is approaching 30 at this point, and the vast majority of those SKUs are edibles. And we've got plenty of new products on the way. We have started distributing concentrates in Saskatchewan. We hope to ship more product in Q1 and definitely in Q2, but we've got more chocolates to introduce in Q2. We just announced last week the introduction of Wanna Quick, which is a new innovative gummy product, again, a Wanna product with an accelerated onset, anecdotally based on experience out of Colorado. And that product sold very well for Wanna, was introduced in Colorado last March, so we're very excited. We've already shipped that product to BC, and we would expect to ship to the rest of the country in the coming weeks and months. Just a quick moment on the team here. Most of the folks that you see in this picture have deep experience with consumer product goods in their own, respective area. So guys like Dave Patterson, who joined us over a year ago, a deep experience in marketing with Major League Baseball, and as well as other cannabis companies and the beer store. Rob Karst, next to him, spent 25 years with companies like General Mills, Clorox, and Maple Leaf. On next to Rob is Melissa Couric, who spent over 10 years in London with Nestle Canada running their drumstick operation. And similar with our sales folks, QA, HR, and marketing, all deeply experienced. And I think the results are starting to pay off. The team is gelling, and the products are performing well in market. I'll take you, everyone, through a little walk here through our brands, and then I'm happy to take Q&A and get deeper into areas where you have more detailed questions. But Indiva is really the corporate brand, although we do use that as a house brand on some of our products, like our pre-rolls and our gel capsules. Looking further down the page, one thing that we've done, and I think pursued aggressively, perhaps more than the other average LP, was to license award-winning products from the United States. And this was really core to our strategy. Our feeling was, in a market where it's very difficult to do focus groups because it's a controlled substance, and very difficult to ascertain what consumer preferences are, we thought, let's license award-winning product that already performs well in mature markets where the competition is intense. For the most part, brands go north in this continent, not south, and so far we think that's paying off. If I'm pressed on why we've had such great success with Wanna and Bang, I think it's because these are products that are market proven. In the crucible of competition in markets like Colorado and California, where cannabis has been legal over decades, at least medically. So we're very proud of those products. And here's a look now, so you can see again the Indiva house brand on pre-rolls, flower, and capsules. We grow a little bit of flower. It's a very small part of our operation now. And for the most part, a lot of the flower that we take to market, we purchase. And going further down the page, Artisan Batch is a brand dedicated to microcultivators, where we do purchase from the best craft cultivators in the country, folks that mostly have brought strains in from the legacy market. And in addition, it really is a passion for them, where it's often a mom and pop operation. They don't necessarily have the resources to deal with the provincial boards and meeting purchase orders and dealing with everything that goes into actually distributing product across Canada. But what they do is they grow fantastic cannabis. And so we buy from them, we process it, it gets released under our brand. And we also use that opportunity to highlight the growers. So some of you may have tried the Island Pinkhead from Dunn's Cannabis. I'm very proud of that relationship. And we also work with another LP called BC Craft that help us in this regard in terms of sourcing some of this great flower. And I would say the Indiva flower so far, whether it's Indiva branded or artisan batch, we've had great success out west, and we're looking to duplicate that success in the east. Further down the page, of course, you see Wana. We have 7 SKUs in market right now, 3 of which were introduced in September, and the last 4 were introduced towards the end of the year. And we'll shortly add the 3 Wana Quick SKUs. There'll be a Orchard Peach Indica, Sativa, a Pineapple Coconut Indica, and a Strawberry Lime hybrid 1-to-1. And keep your eyes peeled, because those should be hitting market in BC very soon. I would expect this month, and hopefully they'll be on shelves by April in Ontario. And if we're lucky enough, we'd love to ship that before the end of the quarter. We'll just see how it goes. Next page here, Bang Chocolate. This was one of our first, I think actually was our first licensing deal. And we've got 5 of their flavors in market with more to come. Stay tuned, for more news on that front. But, both Bang and Wana are special SKUs. In that sense, looking at the OCS in Ontario, there's been a trend towards culling SKUs. So, 2 years ago, the shelves were empty, and it was really as simple as presenting a SKU to the province, having it accepted, getting it listed, and then executing on delivery. It's much harder to get SKUs listed now, and I would expect that trend to continue. And Ontario has been reviewing its list of SKUs. There have been some SKUs that have been culled from the let's say the aggregate inventory list. And looking at Indiva, we've been very fortunate to have several of our SKUs listed as core in-stock SKUs, 3 gummies and 3 chocolates. That's 6 of the 16 edible SKUs that are considered core, and 6 out of the 100 total SKUs that are considered core. And this is very important, because stores cannot order unlimited quantities. And so this system will allow stores to order larger quantities. And with all the new stores opening in Ontario, I think it stands to reason that they would more than likely order the more popular SKUs from the list. And the ability to have those SKUs is in stock. Of course, we have to guarantee 100% fulfillment, which, that's our opportunity and our challenge that we're comfortable with. But we think this will help accelerate growth and hopefully continue to grow our market share as opposed to just maintaining it. So we're very proud of that. Then finally, down the page here, looking at the Ruby products that we licensed from Deep Cell. These have been on our deck for a long time, and I know people are impatient, wanting the sugar and the salts and the jewels to come to market. And the good news is, now that we've completed this private placement with Sundial, we have the capital now to aggressively pursue the production of these products. I would expect the jewels to come to market as early as the second quarter, and the sugar and salts in the second half of the year. The provinces continue to ask us for these products. They're very popular. There are other powder, products on the market that you can mix into a beverage, for instance, but nothing that's a straight sugar or salt. And the jewels, just to speak about those for 1 minute, that's also a very unique product. There's a lot of gummies and chocolate on the market now. As I mentioned earlier, 90% of the market is chocolate and gummies versus, 70 to 80% in the US. So we're excited to bring new products to market like jewels. It's I would liken it to a sweet tart or a rocket, which melts in your mouth or can be chewed. It's sort of a lower calorie, smaller product. So we might do this in a 10 to 1, 10 times 1 formulation, so that you can microdose. It's a very natural, clean product too. It takes the ruby sugar as the base ingredient, so the infused sugar from ruby that we'll make in London, and then it's pressed into a pill format with powderized fruit. So it's I've tried uninfused samples that we've had shipped to Canada. They taste great, and I think it's going to be a very successful product. So we're looking forward to launching that. I won't bore you with this list of all the corporate development that's gone on in the last 3+ years since we went public. But if nothing else, you can certainly see how the business has accelerated in the last 3 or 4 quarters, versus the first couple of years, the agonizing slog through the licensing process. So we're very happy to be fully built, fully licensed, and really just getting down to business. And this is a mock-up of a future Farmgate store. Interestingly, it sounds like there will be Farmgate stores opening up this year. This is not an immediate priority for us, but certainly we see it as a great opportunity to cement our place in Southern Ontario and in London, Ontario in particular, as an LP. And, I don't know how much revenue that store will generate, but I think it'll certainly do well for our brand in the local community. So I think with that, I'd be happy to answer questions anyone might have.
Great, Neil. There's a few questions there. I'll let you have her.
Okay, sure. I'll just go through these one at a time, and please don't be shy. Happy to take all your questions. First off here, will sugar and salt be permitted in Quebec? Great question. Thanks, Rick. I certainly hope so, but I wouldn't want to promise anything. It's certainly not up to us. What I would say is the SQDC, which is the provincial wholesaler in Quebec, they do have a section on their website for what they call ingredients, or cooking ingredients. And so I think sugar and salt certainly qualify. So we're hopeful that it will get accepted. And there may even be a small chance that the jewels would get accepted as well. If I suppose if their inclination is that it's a more medical based product. So stay tuned. Question here on do we plan to upgrade to the TSX? We're certainly looking into it. We think we're at a point now where, particularly having closed the private placement, our financial position is very strong, and so we are looking at that uplisting, and you'll just have to stay tuned here. Another question here about Wana, whether Wana is a public company. Wana is a private company. Bang is public, but Wana is a private company. Nancy Whiteman is the founder of that company and their CEO and chairwoman. And I think absolutely a pioneer and a real genius. I mean, the products they made and developed are incredible. Question about what happens when the USA legalizes. Would Wana just take the Canadian market? Short answer is no. They do not have the right to cancel our license. By the way, we extended that license from an up to 6-year term to up to 20 years. So Wana has we have a great relationship with Wana, and I would expect us to continue to make those products in Canada for a long, long time. I mean, it's a fair question, but no, Wana does not have the right with U.S. legalization to change the terms of our license agreements in Canada. And if they wanted to come to Canada, obviously our agreement would have to terminate, but they would have to either acquire or become a licensed producer themselves. But that relationship's in great shape. Neil, when will Indiva have a store? Probably not this year, but I don't want to give you a date and give you an incorrect date, but when we feel that we're at steady state and generating a lot of free cash flow, then I think we'll look to putting resources into the store. I think there's other ways where we can improve our revenue margins and cash flow rather than open the store. And I don't think a Farmgate store necessarily competes too aggressively with our customers, but we are also a little bit cognizant of the fact that there's a lot of new stores opening up, and we want to fill the shelves of the 1,000 new stores in Ontario with our products rather than just worry about building one of our own. Question about Stonegate and ITG. Look, Stonegate specializes in investor relations in the U.S., where I would say we have had limited exposure. We are listed on the OTCQX, but I would expect, and this has already begun, where they're setting up meetings with U.S. investors. And hopefully at some point here we'll be allowed to travel again. And I think this is a good opportunity to start relationships with a lot of U.S. investors. It's not like we've never marketed in the U.S., but I think that this is an opportunity to ramp it up. And ITG just provides some, I shouldn't say just, but they provide market making services And so this will help reduce the spread both on the Canadian and the U.S. side, and add liquidity to the stock. It doesn't mean that our daily volume is going to double. And in fact, I checked today, 18 of the 44 trading days in 2021, Indiva's traded north of 1 million shares in Canada alone. And with 65 million shares out in the float, that's pretty good liquidity. I mean, that's certainly less than a day to trade 1% of the float. And when you add on the U.S. volume, which has been 500,000 shares plus for most days, I would argue the volume is actually pretty good on our stock. I mean, we are still a small cap at 70 million, so the dollar amount is always going to look tiny in that instance. But in terms of if you wanted to buy or sell 50 or 100,000 shares, that's not a day's volume at all anymore. Question about WannaQuick: how much of an increase in sales do we expect? I think it's too early to say. I mean, it's look, if we average 10 or 20,000 units, let's say per big market per SKU, could add a few $100,000 of revenue per month. But I don't want to guide you to that. We've only just launched the product, and I think we'll just have to see how it rolls out. Question about uplisting NDVAF. Yeah, we are on the OTCQX Best Market, and there are companies that often uplist to the NASDAQ. I think that's a little further. I mean, we do have relationships with companies in the US that are plant touching, so we'll have to take a deeper look at that one, Rick. Are we looking at CBD oils? Well, we do sell CBD capsules. That is one of our SKUs. I wouldn't say it's one of our core products. I mean, again, we prefer to sell edibles that contain CBD rather than just a CBD oil. That's a crowded space, I think, looking just at CBD oils or just the tincture space in and of itself. And so if we were going to, enter that category or subcategory, I think we'd want to have something differentiated, so that we could make a difference. Question here about Saskatchewan. Yeah, in Saskatchewan, we have moved away from a distributor model to a direct-to-store model, and that's starting to gain some positive traction. So stay tuned there. Date for next quarterly. Our next quarterly would be our year-end, and we have 120 days to file our year-end. So I would expect that at the end of April, you'll see our Q4 numbers come out. We don't have an exact date yet. Question here. Do we plan to make acquisitions? Good question. Obviously, I cannot tell you that over the over this forum, but we always look at everything that crosses our desk, but our focus is on executing on our plan right now. With craft cannabis getting a lot of traction, is Indiva planning to invest further in that category? I think the answer is absolutely yes, not by growing it ourselves and not by acquiring gardens necessarily, but absolutely we plan to keep bringing more high-quality craft product to market. Is it possible to elaborate on the outlook for Q1 guidance? No, I'm not going to elaborate on Q1 guidance here. We're not even through the quarter. We put out a press release talking about that, and I would refer everybody to that, please. Are we planning any nano-based products? Well, that's essentially what WannaQuick is. So I would encourage people to take a look at Azuka. Azuka is a company based in the US that came up with a proprietary formula called Time, which really involves encapsulating the cannabinoids at a molecular level. So rather than having to go through the entire digestive system to get into the bloodstream through the liver, what the Azuka formula does inside the WannaQuick gummies is allow the cannabinoids to enter the bloodstream through the stomach much quicker. So that's a product for you, Mark, if you're looking for a nano-based product. And last one here on the UK opportunity. We're starting to look at exporting to the UK. I would guide you to put $0 of revenue into your 2021 projections. But our goal is to try and understand that market and that path to market better. And if we shipped even one unit to the UK this year, I would consider it a huge success. So I think I'm out of time here. I don't want to cut into the good folks at Analysis. So if there's any other questions, I would encourage you to reach out to our IR team. Anthony Simone is reachable. His contact details are on all of our press releases on our website. And feel free to reach out directly to us at Indiva, please.